Hey, what's up, stock compounders? Brad here. So we are back for episode 3 of stocks that smart value investors are buying this week. Okay. Now, I'm pulling this information from a thread in Corner of Berkshire and Fairfax. This is a paid message board. It's like $30 Canadian, I think lifetime. So very cheap. But there's a thread in here called "What Are You Buying Today?" Okay, this thread has over 2 million views. Okay, it's a very popular thread. Currently, we're on page 654. So the thread started back in 2013, and each day, people are posting what they're buying. These members of Corner and Berkshire and Fairfax. So what I did is I looked back over the last week and compiled what investors have bought in the last week, at least what they've said that they've bought. And there's 19 companies here, okay? Now, in the first episode, I really just showed companies that were under 2 billion market cap. I've expanded that now because that would be very limiting based on what's happened in the last week. There would only be like 4 companies on this list. So this includes all of the companies that investors said they were buying in the last week. I just want to quickly go through what these columns are. So pretty obvious: ticker, company, description, what the company does, market cap, how big is the company, number of shares outstanding times the stock price today. Insider ownership, okay? Something I picked up from Chris Meyer, author of 100 Baggers. If you want to, as investors, myself anyway, I want to align myself with the interests of management. So the more skin in the game that management has, the more equity that they own, they tend to make decisions that are better aligned with shareholders, okay? Because they themselves are shareholders. So I like to see high insider ownership. And there's a score column you can see here. If a company is 10% or higher with insider ownership, you get a point, okay? These 3 columns are the score columns. And that's really how I sorted this list based on the score. So that's the insider ownership column. And this isn't always the easiest information to find. The first place I look is usually value investors, not value line. I look at value line. If I can't find it there, I'll look up the SEC filings, find the proxy to the annual report. Or if it's a foreign company, I haven't figured out how to look it up through the SEC website. So I'll just do a search. I'll search the company name. I'll search insider ownership, and often something will pop up. But don't take these as certain, these insider ownership numbers. If you're going to go ahead with any of these companies, do your research, verify what the actual insider ownership is. Guru investors. This is how many super investors own the company as of the end of the fourth quarter, 2020. And these are only gurus that are tracked in Dataroma, okay? We may pop into this later, but the website is dataroma.com. So you can see there's a vast difference between some of these companies don't have any super investors that own them. If you look, Berkshire Hathaway, 23 super investors own Berkshire Hathaway. So quite a range. Value Investors Club. So Value Investors Club is basically a website. It was started by Joel Greenblatt, and you submit investment ideas. And only the best investment ideas, the most thoughtful write-ups, make it. So where other people in the community can see those write-ups. I really appreciate those write-ups. There's a lot of good stuff in there. So what I've done here, I looked up each of these companies in Value Investors Club, and I put the month and year for the most recent write-up in Value Investors Club, because this is a great place to kind of dive deeper into a company, look at a company through the eyes of an investor who, has some skills, a decent investor. Helps you kind of break down the investment case. So that's that one. You get a point if there's a write-up within 2 years, okay, for the score column. And then with guru investors, if there's one or more gurus who own it, you get a point. So that's where this score column comes into play. Because these are things that I value. High insider ownership, I value that. It makes me more interested in looking into a company. If a very smart investor with a great track record has put money on it, that's again additional motivation for me to dig in. Same with the Value Investors Club write-up within the last 2 years. And then these last two columns, acquirers multiple. So this is a metric, I guess it was created by Tobias Carlyle, who wrote the book, The Acquirer's Multiple. And it's really just the inverse of earnings yield. So acquirer's multiple is enterprise value divided by operating earnings, okay? EBIT, the last 12 months of operating earnings. So that's what the acquirer's multiple is. It's effectively what it is. It's, how much would it cost you to buy the whole business divided by what do you get in operating earnings in 1 year from that business. So, if it's an acquirer's multiple of, say, 12, if the company doesn't grow at all, it's going to take me 12 years to pay myself back with the operating earnings from the business. Obviously, that's kind of a general rule. There's a lot of nuance in there, but I think it's a good metric to figure out how cheap a business is relative to earnings. And then the last column here, 10-year revenue. So this is the revenue growth of the company over the last 10 years, annualized, okay? So a lot of these companies don't have 10 years of revenue to look at. Or, it's a holding company, Berkshire Hathaway, Fairfax Financial. That metric doesn't quite fit a holding company like that. So I excluded those, or I just put a dash for those companies. So anyway, guys, that's what the columns are. Let's get in, just kind of run through each company quickly. So Berkshire Hathaway, this is A and B shares. What is Berkshire Hathaway? Berkshire Hathaway needs no introduction. Warren Buffett, the GOAT. I don't need to say more. 580 billion market cap company. Pretty high insider ownership, 18%. A lot of that, I believe, is Warren Buffett. But yeah, that's a solid insider ownership number for a company that large. That's very impressive. Like I said, 23 super investors that are tracked by Dataroma are in this. You can look at this write-up from July 2020. Now, there's another really interesting treatise for Berkshire Hathaway that came out February, Semper Augustus, okay, in their annual letter to shareholders. There's a lot about Berkshire in here. This was written on February 15th, 2021. You can see the whole last section, Berkshire Hathaway, repo madness. So if you're interested in Berkshire, there's just a ton in here. What is it, like 109, 83? There's 26 pages of goodies in this annual letter. So I'll link to this in the description if you guys are interested in diving deeper into Berkshire Hathaway. Score of 3, there's a reason it's a top 10 company for super investors that are tracked by Dataroma. Second one, Madison Square Garden Entertainment. I believe this was spun off just in the last year, so we're not going to get, and I'm pretty sure it has had negative earnings recently, at least since it was spun off. So we're not going to get any numbers over here for acquirers multiple or revenue. 2.4 billion market cap, pretty small, one of the smaller companies on the list. Dolan is the I think, CEO of this company. Controversial figure. I think he himself owns just about 20% of the company. 4 guru investors own it. That's pretty strong for a 2.4 billion market cap company. Pretty recent write-up, just October, 5 months ago. So check out that write-up from Value Investors Club if you're interested in this one. Score of 3. One of only 3 companies that had a score of 3. Next one, Pershing Square Tontine Holdings. This is Bill Ackman's Spac. And I'm sure most of you have heard of this one. Just under 5 billion market cap at the moment. We don't know what the insider ownership is because, there's some variability depending on, which company they bring public. It's kind of a moving target. It's not predefined. But it is structured in a way that, Pershing Square has some skin in the game. So that's encouraging. I gave Pershing Square Tontine Holdings a point for the insider ownership column. 2 guru investors currently own that, or I should say as of the end of quarter 4 of 2020. There's a pretty fresh write-up 6 months ago, September 2020. Now, Pershing Square Tontine Holdings, has had a lot of, it's been pretty explosive recently. Well, the high was just February 16th, $33 per share, okay? So a month ago, no, a little more than a month ago. And now it's down to like $24.50, okay? The NAV for this SPAC is $20 per share. So, if it starts getting close to NAV, I got to be honest, guys, I'm going to be probably nibbling on this one. I see a lot of downside protection and a pretty decent potential upside. Now, I probably wouldn't hang on to it past a deal announcement. I'd probably just, take that pop and get out. But it could be an interesting play if it gets closer to NAV. Next one on the list, Vontir. Okay, this was a spin-off, I think definitely within the last year, maybe the last 6 months or so. Just over 5 billion, 5.3 billion. I don't really know what this company does. It doesn't quite, it doesn't have the insider ownership numbers that would make me comfortable. Only one guru owns it, does have a write-up here. But I think the price has also come up a bit since it was spun off. So it's really just not something I can wrap my head around. Or honestly, I don't have that much interest in this, industry that the company is operating in. But, could be interesting. Pretty impressive acquirer's multiple, just under 12. That is very reasonably priced, especially if there's, some growth potential for the company. So could be interesting for some of you to look at. Number 5 on the list, Alibaba. Again, needs no introduction, sort of the Amazon of China, online and mobile commerce in China. Very large company, 633 billion-ish. It's the largest company in this list. 13% insider ownership. Again, just like Berkshire. Pretty impressive insider ownership numbers for such a big company. 10 guru investors, that's the 3rd highest on this list. You would expect that with a company this large and a company this strong in terms of what they've done over the last decade. So the VIC write-up didn't quite make the cutoff of 2 years to get a point in the score column. But, I'm sure there's still a lot that's relevant from this February 2019 write-up. Acquires multiple of 36. So this is kind of what we're seeing for these fast-growing tech companies. 36 is, not unreasonable for what the rest of the market is trading at in tech. Just for reference or for comparison's sake, Amazon is trading at 69 acquirers multiple. So, if you compare it to Amazon, it's compelling from a cheapness perspective. But, I don't know enough about Alibaba and Amazon to be able to do an adequate comparison between those two. But you can see the 10-year revenue growth, 47% annualized. That is crazy. Now it's gone down a little bit in recent years, but I think it's still in the 30s. If you take the last 3 to 5 years, very impressive growth for Alibaba. And it would be an interesting exercise to try to gauge, what is the total addressable market for Alibaba? What are their plans to, do they have plans to expand? I don't know how many countries they're in now, but that's something I should dig a little deeper into. Alibaba is one that I'm potentially interested in. It has come down quite a bit. I think it's maybe 230 per share right now. I have kind of a target somewhere around 215. If it gets to 215, I'm going to be strongly considering kind of taking a starter position in Alibaba. Next on the list, Credit Acceptance Corporation. Auto dealer financing programs, okay? And I think they said in the description for the company, regardless of credit, all right? So, it's not the kind of company I'm very interested in. There could be some predatory stuff going on here. 5.7 billion market cap, 5% insider ownership. So, it's got 2 points. It's got one for the guru investors and the pretty recent value investors club write-up. Acquirers multiple. This isn't actually an acquirers multiple because for this kind of company, for a financial services company, this is a price to earnings ratio. The acquirers multiple doesn't quite fit with this kind of company. 10-year revenue growth, 9%. So, nothing to get too excited about, but I think pretty consistent revenue growth over the last 10 years. So that's Credit Acceptance Corp. The next one, British Petroleum, okay? BP, an integrated oil and gas company in the UK. Now, it seems like the whole industry, the whole petroleum industry, has really faced some headwinds over the last year with the lockdowns, with less people traveling. So it seems like, could be an interesting value play. I'm not particularly interested in this sector myself. 88 billion market cap, very small insider ownership. 2 super investors own it. Very fresh write-up just 3 months ago. And then, negative earnings, right? So there's no acquirers multiple if earnings are negative. And then it was the lowest revenue in 10 years in 2020. So worst year in the last decade for British Petroleum. So could be interesting from a value perspective, from a discounted pie perspective, I should say. And I really like that framework that Monish Pabrai uses, growing pies versus discounted pies. And that's really, I think, what the acquirers multiple and the 10-year revenue growth columns are trying to represent here. Acquirers multiple, is it a discounted pie? Somewhere kind of below 12 or so. Acquirers multiple, I would say, are probably discounted pies. And then revenue growth, 20% or more. Those are pretty obvious growing pies. So that's kind of 2 ways to think about these 2 columns, what I'm trying to simulate there or Pharma company focused on treating eye diseases. So I have no insight into pharmaceutical companies. So that's an immediate pass for me. This is one of the smallest companies on the list, 460 million market cap, very high insider ownership, which, isn't totally unusual with a company this small, but it is encouraging. It is a plus for sure. No super investors involved. Write-up from May 2020, so 10 months ago. We've got a write-up there. And I think, if I remember correctly, there's a target price in this write-up of like $26. No, yeah, it might be $26 per share. And a current price around $7, okay? So this could be a 3 or 4x if, the thesis that this Value Investors Club member plays out. All right. So, if you're interested in pharma, if you have knowledge of pharma, could be one to look at. They did lose money in the last year. I think they've lost money ever since they've been a company. So, again, not unusual with pharmaceutical companies. Next one, Fairfax Financial Holdings. Okay, this is the Berkshire of Canada, run by Prem Watsa. So, and of course, Corner of Berkshire and Fairfax is where I'm pulling this from. So, a lot of the members in there obviously are very familiar with Fairfax Financial. 11.5 billion market cap company. 10% insider ownership just meets that cutoff for that point in the score column. Just one super investor owns this company, according to Data Roma. Right up a little more than 2 years ago, so doesn't get a point there. But, pretty close to a 3 for Fairfax Financial. And again, because it's a holding company similar to Berkshire, these metrics don't quite work for Fairfax Financial. And this really isn't a company that I've done a deep dive on. So I'm curious from any of you, if you've looked into Fairfax, if you own Fairfax, it's definitely interesting. You look at the market cap of Berkshire, and you look at the market cap of Fairfax. I mean, if Fairfax can perform anything like Berkshire, the sky's the limit in terms of what this company can become. Number 10 on the list, C Limited, online gaming services based in Singapore. Okay, the company headquarters is in Singapore. Pretty large, 103 billion market cap, 16% insider ownership, 2 super investors. Write-up that's a little dated, almost 3 years old. And for a company growing this fast, I mean, look at that. 6 years this company has been public, has an annual revenue growth rate of 73%. So could be interesting. Could be an interesting growth company to look at here if you're familiar with the online gaming, industry. Next one, British American Tobacco, not a company that I have any interest in or an industry that I have any interest in. It's UK, obviously British, a UK holding company for the manufacture and distribution of tobacco products. 86 billion market cap company, very small insider ownership, no gurus involved. August 2020, so pretty recent write-up, just over half a year ago. 9.6, the lowest acquirer's multiple that we have in this list, okay? So could be cheap, but is the pie shrinking? To me, that's the big question with British American Tobacco. What does the future hold for this company? Can they pivot and, get some kind of growth happening again? Because I'm pretty sure their numbers have been, well, you can see the 10-year revenue, 6% per year, okay? So fairly stagnant for British American tobacco. Next, Visa. I was a little surprised to see Visa on the list. I don't know why. It's a great company. I guess I just think of it as being pretty frothy in terms of price. But again, it's not just about price to earnings. Okay, I'm trying to rewire my thinking about how to look at growth companies. How do you measure a growth company? Obviously, a big way to do that is look at revenue growth. 10%, consistent, solid. It's, especially for a company as large as Visa. Digital payment services, we all know Visa. Nearly $500 billion market cap. With a company this big, it's not surprising to see under 1% insider ownership. But like I've pointed out, it's possible to have, very significant insider ownership at this size. Very popular for gurus. Okay, 20 super investors own this company. It's probably in the top 15 or so companies that are owned by gurus. 32 acquirers multiple. Again, for a growth company, that's not unreasonable. Now, 10% though. I mean, to pay a 32 acquirers multiple for a company that's growing 10% in terms of revenues doesn't get me very excited. I think probably what people are seeing here, they must be seeing some other, vertical for Visa where, I don't know, maybe they're going to get into, I don't know enough about Visa to speculate, but honestly, I'm not so interested in Visa looking at these kind of initial metrics. Verizon Communications. So one of the largest buys recently by Berkshire Hathaway was Verizon, a holding company for consumer and business communications services. So I'm actually a customer of Verizon. I'm on a family plan. I plunk down like $250 per month, the whole family does, to Verizon. So, based on that, seems like a company I would be interested in. The only issue is I don't actually like Verizon. Okay, I don't find their customer service to be very good. It's kind of like I'm with Verizon because it's the least bad option that I have for cell phone service. So that doesn't get me excited to be an investor, to be an owner in the business. Very large, company in its industry, less than 1% insider ownership, 4 gurus, acquires multiple, interesting, 13. That's interesting in the current market environment. But look at this, 2% is what they've grown revenues over the last 10 years. That hard to get excited about that. I think they have improved their margins over the last 10 years. So, 2% revenue growth isn't the whole story. But there's a fairly robust thread in Corner of Berkshire and Fairfax on Verizon if you're interested in learning more about that one. But, not very interesting to me. I think it's like a 3 or 4% dividend yield as well. So if you're into dividends, it could be an interesting play. Next one, Columbia Care Inc. Okay, medical and adult use cannabis products. So if you're interested in the cannabis industry, I think last week or the week before there was another cannabis company that showed up. Take a look at this one. I think it's based in New York. Pink sheets, over-the-counter market. So really important to really do your diligence on that one. 1.8 billion market cap, so pretty nice. Under 2 billion, considered small cap. 28%, pretty impressive insider ownership. Look at that, 78%. Over the last 4 years. So it's really only been a public company, or at least had revenues, for 4 years. But, it is aggressively growing those revenues. But guys, really make sure you look into where those revenues are coming from. Make sure they're legitimate revenues. For a company like this, over the counter, I can remember, who was it? Nikola. They were totally fudging their revenues. Essentially, I think like one of the members of the board was buying a bunch of stuff, and they were counting that as revenues. So you really got to do your diligence with a company in the over-the-counter market like this. I mean, you always have to do your diligence, but the SEC really isn't watching out for you with a company like this. Next one, Khosla Ventures. So Vinod Khosla, very well known in the venture capital community here, especially in the Bay Area. A Spac, okay? And it's near its net asset value. Net asset value for this one is $10. I think today it was trading at like $10.05. So this one could be an interesting SPAC in terms of upside with minimal downside. Heads I win, tails I don't lose much kind of play. 349 million market cap. This is after a deal, kind of, what Khosla Ventures, what Khosla would own would be about 15% of the outstanding shares. So that's nice. That's a nice chunk there, which is why we get a 1 on the score column. Next one, apartments. This one showed up last week. It showed up again. The guy who kind of pitched it in Corner of Berkshire and Fairfax got a few, pretty high-profile Corner of Berkshire and Fairfax members interested in this one. Ownership and operation of Class A multifamily properties in the southeastern United States. Quite small, kind of right in our sweet spot in terms of, for all you Monish Pabrai fans, 500 million market cap. It's too bad there's not more of an insider ownership. I'd be a lot more interested in digging into it if there were a higher number here. No gurus, no value investors club write-up. 67% revenue growth over the last 10 years. So very impressive revenue growth. It's possible this one just still flying under the radar because of its size. So if you're interested in this one, definitely pop into Corner of Berkshire and Fairfax. I don't think there's a thread dedicated to this particular company, but look in the what are you buying today thread. Look through kind of the last couple pages, and you'll see some really good information on preferred apartment communities. Next one, Gazprom, a global energy company based in Russia. 72 billion market cap. Doesn't check any of my boxes there. Acquires multiple of 23. For a 10-year revenue growth of 6%, it's hard for me to get excited about an acquires multiple of 23. So on the surface, I don't see much here. But for any of you that are into the oil and gas industry, might be one worth checking out. Ping An Insurance, Chinese company, okay, trading on the Hong Kong Exchange, financial products and services in China. Obviously, big on insurance. 220 billion. This is in US dollars market cap. Didn't check any of my boxes. Acquires multiple of 14. Pretty reasonable. 20% revenue growth over the last 10 years. That is impressive. So for those of you looking to get some exposure in China, this one might be interesting, okay? Might be one to put on your radar, especially if you understand the insurance industry. It's possible, I feel like I saw it somewhere that Li Lu was involved with this company at some point. I don't know if he is anymore, but I saw something about that somewhere. Obviously, take that for what it's worth. Last one, TFI International, Freight Transportation and Logistics Services based in Canada. 6.6 billion market cap, 5% insider ownership, right up from, quite a while ago. What is that? Over 3 years, 3 years and 3 months ago. 20 acquires multiple, nothing that interesting there. 7% revenue growth over the last 10 years. It doesn't get me excited. So that's the list, guys. 19 companies to take a look at if you're itching to dive into something new. If I had to pick a couple, Pershing Square Tontine Holdings is definitely on my radar. Alibaba is on my radar. And, C Limited. I don't know online gaming, so that's the only thing holding me back from that. I mean, the revenue growth is phenomenal. This preferred apartment communities is something I might have to dig into, quite honestly. So, and Coastal Ventures, I don't want to skip over that one. So there's some interesting stuff in here. Let me know if you plan on diving into any of these or if you currently own them, and how you feel about your ownership in whichever of these you own. That would be interesting feedback for me to get from you guys. Whew, that was a long one. All right, guys, thank you for watching. What stocks that value, smart value investors are buying this week. I'm enjoying this series. You're going to get one every week, so get comfortable. All right, guys, I will see you all in the next video. Take care.